You're a W-2 employee. There's no tax planning available. You want to do real estate, right? Hi, this is financial planner Sean Mullaney. Let's discuss. So I see this out there. When you're a W-2 employee, there's just not much in the way of tax planning out there. And you know what maybe you should do is you should do rental real estate, because that opens the door to all this great tax planning. Well, I got 3 problems with that, right? So the first thing is this. Let's just say you want to invest in rental real estate because it's going to improve your tax situation. You've now radically changed your portfolio allocation to obtain some sort of tax benefit. We're not even so sure what that tax benefit is. I'm going to come to that a little later. But hey, you know what? I'm just going to radically change my portfolio allocation because, it's hard to buy. Oh, I just bought $100 of that house. It generally doesn't work that way, right? So what we're going to do is we're going to change our portfolio. We're going to let the tax tail tell us what to invest in. Really? That's a good reason to buy rental real estate? I'm not here to say there aren't good reasons to buy and to invest in rental real estate. I'm here to say the tax tail is not one of them, right? Look, we all want to do a little better on our taxes, but should that change our portfolio position in a very significant way? I tend to doubt that's a good way to approach it. And oh, by the way, rental real estate's a business, okay? And how do we know you're just going to be good at this particular business? Right? Think about all the different businesses that are out there. I know there are dozens, hundreds, thousands of potential businesses out there. Do I think I'd be good at all of them? I'm pretty sure I wouldn't be. And I'm pretty sure most of you, no offense, would be bad at many of those businesses, even if you are really good at some of those businesses. Right? So that's the first reason I'm not so fond of investing in rental real estate for tax reasons, because it's changing our portfolio allocation for some mythical tax benefit, and we may not be that good at the business. Well, then some people will amp it up. They say, well, you got to invest in rental real estate and become a real estate professional. That's when you're going to be cooking with gas from a tax perspective. All right, we got to step back on that one. Right? Because this one, not only does it change your portfolio allocation in a very significant way, it changes your lived experience in a very significant way. Because in order to become a real estate professional, your time is going to have to be very heavily allocated to rental real estate, right? You are becoming a real estate professional, which over the course of a number of years will require thousands of hours of your time and attention, and you are going to spend thousands of your precious hours on this earth doing a business to get some tax benefits. Really? Right? It was one thing when we were just saying, well, change your portfolio allocation, you get some tax benefits, that's great. Now we're saying change your portfolio allocation and change your lived experience with your precious little time on this earth to get a few tax benefits. Oh, by the way, the tax benefits aren't even that good. Because here's the thing, all we're doing with this this real estate professional thing is we're trying to take depreciation deductions from our rental properties and deduct them against our ordinary income. First of all, non-real estate professionals have some limited ability to do that. And by the way, when they get retired, they're going to have a very significant ability to do that because their income is going to be relatively low. And second, you got to have those depreciation deductions. You got to do a lot of investing to generate those depreciation deductions, right? If we're going to allocate our time on this earth and our portfolio into one and only one industry just to get some tax breaks, that's what we're doing here. That's what we're going to do with our time and our portfolio, right? Oh, I just don't like that. Look, I'm not here to say don't be a real estate professional, but if you want to be a real estate professional, do it because you've got knowledge, skill, education, and desire around real estate. There are people that have that. That's okay, right? But don't do it because you want some sort of tax break. That makes no sense to me, right? If that's our primary motivation, I would think twice heavily, right? I'm not here to give you investment advice, but I think you should do investments for the right reasons. And usually tax, especially if it's something like rental real estate, when we're getting into a whole new business, is probably not the right reason to make that investment. All right, here's the third reason that I don't like this idea of, well, we're a W-2 employee, we can't do tax planning, so we have to do real estate. We can do a ton of tax planning when we're a W-2 employee. We can do a boatload of tax planning. It starts at work. For most of us, we have a 401k, 403b, 457. We could take the tax deductions at our highest marginal rate, get a real benefit from it. And then, oh, by the way, in retirement, when we take that money out and live off of it, it tends to be very lightly taxed. I've done numerous videos on that. I'll put one up there. I hope that's the right place where the card shows up. All right, so we can get tax rate arbitrage as a W-2 employee in a great way. We take deductions in our highest earning years, and then we get retired, maybe even early retired, and now we're cooking with gas because we're either doing Roth conversions at low marginal rates or we're just living off the money and paying a low marginal rate. So that's great. What about a Roth IRA at home? I'm a big fan of a Roth IRA, particularly when we do it at home. That locks in tax-free growth on some of our assets for decades. Let's live a long time, really enjoy it. Even our kids, they would get usually another 10 years of tax-free growth. That's another great tool that's available because of our W-2 work. And then maybe it's something like an HSA, right? Another tool where we can get a deduction on the way in, have tax-free growth, and then have a tax-free distribution on the way out. So I think, if we're thinking about total lifetime tax, being a W-2 employee in today's environment with the tools available is pretty good. And we shouldn't be hunting out for these mythical tax planning opportunities presented by one and only one industry, rental real estate, if tax is going to be the primary reason to get into a whole new industry for us. Hope you enjoyed this video. If you did, please mash that like button and subscribe to my channel. I'll see you next time.